Hey guys, Mike here. So we got a huge week up ahead of us, and I mean absolutely huge. And I'm going to tell you what we need to watch out for, because this is going to be a very busy week and a very crucial week. Told you last week that, don't be surprised if you start to see this rally get legs. That's what happened. I'm going to show you why I actually thought that, and I'm going to show you exactly what you can expect, and then what's to be expected not only during this week but after this week, and why it's crucial that don't skip through the video. I'm going to get through it as fast as possible with this data, but I got some great stuff for you. And understand, earnings week starts this week, and really the big ones as far as I'm concerned. I mean, you got PepsiCo's a big one, Delta for the airlines, but you got the banks and everything starting Thursday and Friday, all the big financial institutions. So we're going to get to see about loan originations, savings, how the investments are going, that kind of stuff. So that's big on the financial side. Now, as far as what the news is, it really starts Wednesday. Like, this is the big stuff on Wednesday right here. CPI data coming out first thing before market open. That will move the markets. There's projections all over the place. It could be 9%, it could be less than what we had. The very next day, all of a sudden, you got the producer price index. Plus, initial jobless claims on Thursday, and then you're going to have retail sales. This is going to be big on Friday to see, are we still spending? Is there discretionary spending going on? People buying stuff they really just don't need because they just got money burning holes in their pockets. That's what we're going to get to see. And here it is, guys. This is why I personally thought we would have a run on the first week of July and then leading up into this week, is because if you look, the 2-week S&P 500 returns since 1950, what is the number one best returning 2-week period? It is July, the first half of July, which is key. If you look at this chart, though, look very carefully. What do you see? The second half of July, August, September, right? What do you see? Because you need to understand, I'm going to cover this later on in this video. You see that they're either got a little bit of positive returns or in the negatives. And by the way, if you get anything out of this, please hit that like and subscribe button for me. I really appreciate it. Think about sharing the video. As always, guys, thank you for all your support. And so historically, we're on the right track, right? So now I'm going to show you basically what's going to most likely happen this week on the chart, see how they're set up. Then we're going to go into the news you really need to understand, of what is expected after this week over the next 3 to 4 months. As you can see right here on the S&P, guys, we got this gap above us. It already filled the other gap, just like we talked about last week. It's moving up to this gap. It hadn't crossed that trend line. All right, that descending trend line has been there for a long time. Has not crossed that. The NASDAQ crossed it and filled its second gap, right? So the RSI is strong. Stochastic RSI in the money zone, building up momentum right there. And if you look at ARK, and I'm going over ARK because that way I don't have to cover 10,000 stocks. This is risk, right? It's as risky as it gets. Well, it broke out. Remember last week we talked about it, what was going to happen this week, or last week, excuse me. It broke out of that channel, right? Look at the RSI, look at the stochastic, and look at that popular squeeze momentum indicator down there building up. And you can see everybody's pointing to 52, right, for the next target. Why is that trend line important? Because it goes all the way back to 2020 during the crash, right? So it's been there for a while. We bounced off of it as support. We bounced off of it as resistance. And of course, Cathie Wood is celebrating like crazy over the last 2 weeks, basically, because they're up about 10%, I believe, if not more. Now, here is the most important chart to me. And this one you need to mark in your trade view or whatever. This is a logarithmic chart. This is the QQQ versus the SPY. This is risk versus value. You can see it's bounced off of it multiple times since 2006. What do you see happening now over the last 4 weeks? It has been bouncing off, repeatedly holding that line. I put the RSI on it for a reason. What happened? It got oversold. More people were in value than risk, right? Risk off. What happened? Hadn't been oversold since 2013. Hadn't been oversold since 2008 and the dot-com bubble. Again, rarely happens on the weekly chart, but that's what happened. And here we are. People are starting to take on risk. That's why you see ARK moving up, right? Look on the daily. Bounced off of it 1, 2, 3 times. And you see those candles, those green candles building up right there. RSI is looking good. And so people are taking on more risk right now. And this is the chart that shows you that. And if you look carefully at ARK's chart, it has been basing or building up a base of support since all the way back in May. It's been trading up and down sideways. building out. That's what usually happens. You get the consolidation, the move up. And so people are starting to take on risk because they've just been trounced. Those stocks have down anywhere from 70, 80, 90%, some of them. And so, and then of course, value, you hear people talk about, is getting expensive now, right? And so, you know, that's something to take a look at. And, you know, the question is it going to continue? Depends on the data this week. If CPI comes out at 9%, or, you know, initial jobless claims come out, whatever, and producer price index numbers come out a mess, and retail sales are way down or something, or show weakness, then you can't imagine we're going to continue up, right? And so, but does it surprise me the market's selling us up into it? No, it's done it multiple times this year, right? And understand, historically, after July 15th, this is crucial, make sure you listen, it is the worst 4 months for the NASDAQ, okay? Past July 15th. Historically, that's true. I went back over the last 10 years on the NASDAQ chart. I saw, you know, it wasn't that they just dropped or crashed or burned. Most time, they just ended up, over the next 4 month period, flat, right? Some of them end up between 3-5% up. But over a 4 month period, that's not good, okay? Especially for the NASDAQ, right? It moves up pretty fast. And so, you know, that's what we're looking at, but that's why you see what are traders doing right now. You can see they are loading the boat on VIX calls right now. This is the VIX call to put volume, and it hadn't been this high in a long time. But because of all this information coming out this week, I mean, and you got earnings coming up, you know, this is a huge week, a huge month coming up here, and they're expecting, I mean, the VIX, we still hadn't had that 45 reading or above. You usually get in bear markets, and that's one of the main reasons they're buying them up, right? Because it's actually, I guess, a low risk, really, if you think about it, because all the macro data and everything else kind of skews towards we should see further sell-off happening if the data holds true. And I'm going to come out with a different video tomorrow to kind of show you, you know, we'll talk about, maybe we can try and project what CPI is going to be, and also talk about some of the earnings that's going to happen for these big mega cap stocks. Because why? They're what holds up the index, right? They may be down, but they're nowhere near as down as other stocks. And so it's a lot of people are hiding out in those stocks, right? Because a lot of them are just really cash heavy. They have, you know, some of them have between 50 and 100 billion dollars in cash sitting on their books right now, and they're conglomerates, right, worldwide, and they're not going anywhere. You don't have to worry about them going bankrupt or anything. They can survive any pretty much bear market. So a lot of people are doing that. Plus the valuations have gotten a lot better than they were before, right? And so, you know, I'll get more details on that, but, you know, that's what we got going on for this week. Understand, you know, don't be surprised over Monday and Tuesday, especially if you see, you know, tech and everything, all these risky small cap stocks, things like that, moving up big time. They moved up big time last week. The ARK stocks, you can see what's happening there. And so watch the Chinese stocks. A lot of people, not us, but I mean, the big institutions are rolling into those stocks because they're doing over there, remember, quantitative easing. We're doing the whole rest of the world is doing quantitative tightening while they're actually trying to push out money into their economy, which, by the way, I don't know if you saw their CPI data in China. It jumped from 2.1 to 2.5. All right, and they expected 2.3. So it seems like their inflation is rising. Again, I trust none of the numbers coming out of that country, but the fact they even showed it rising, I was surprised. You know, let me know what you think in the comments. So, and if you got anything to add to this stuff right here, information, whatever we need to know, add in the comments. I always appreciate it, okay? And so let's buckle up for a good week, and I got some good videos coming out for you guys. So have a good night, and I'll see you tomorrow.